Hello. Every spring, WTO economists issue a forecast for global trade. This year's forecast is different, however. COVID-19 has toppled the global economy, creating enormous shocks to supply and demand. We project that trade will fall steeply in every region of the world and across all sectors of the economy. In an optimistic scenario, our economists see the volumes of global trading goods tumbling by 13% in 2020. Now, if the pandemic is not brought under control and governments fail to coordinate policy responses, the decline could be 32% or more. All of these figures, of course, are subject to uncertainties about the pandemic's duration, its economic impact, and the effectiveness of the response measures adopted. Now, these numbers are dramatic under any standard. Comparisons with the 2008 financial crisis and even the Great Depression of the 1930s are inevitable. Now, and that is why I want to emphasize that the underlying causes of this economic crisis are very different from the previous ones. Our banks are not undercapitalized. The economic engine was and is in decent shape, but the pandemic has cut the fuel line to the engine. If the fuel line is reconnected properly, the global economy can recover quite rapidly. Now, two factors will determine the strength of our recovery. One, how quickly can the pandemic be brought under control? And two, the policy choices governments make. Governments around the world must lay the foundations for a strong and socially inclusive recovery. Fiscal policy, monetary policy, and trade policy, they must all pull in the same direction. Keeping markets open will help economies recover more fully, and working together, countries will bounce back more quickly than they would acting alone.